to do some training. I think you're going to really enjoy it tonight because I've been playing with the walk forward optimization and doing some more work on that, and it's amazing how on almost a weekly basis TradeStation are improving their analysis, their system analysis. So there's a lot to go through tonight. As I mentioned before, this would be a 3-part series. Well, the more I delve into this and the more it's going to basically be more than just a 3-part series. This is going to be a huge part of our training. So more to come. So let's just go through just a little bit of a recap of what we did on Monday, and then I'm going to get stuck into showing you what TradeStation have put together with their walk forward optimization. Tonight's really part 2 of the walk forward optimization, and we're going to do a quick recap of the optimization overview, demonstration in TradeStation. We're going to talk about the inputs and filters we're using, the optimization methodology, including the walk forward analysis. So we just touched on it on Monday night. We're going to go into a lot more detail tonight. Interpreting the reports. I'm going to show you some awesome stuff in the walk forward optimization analysis that ties in with what we're doing at the moment with our system performance tracker. Not quite as drilled down as what we're doing, but it's still very good and will save you a lot of time, which is fantastic. And remember, the goal of this whole process as traders is to produce a robust strategy moving forward. So that's our ultimate goal. So let's not waste any time. And remember that basically, I'll just set the scene. My goal is to have our strategies or our systems being traded have the ability to be able to have a central register for where we can in real time, or at least end of day, we can log into either a platform or a website and access the best systems that we've got. So anyone like Donnie or Lorenz or Muzz, Nick, Scott, Stephen, David, any of you, Andrew, can just log in and say, right, well, look, I'm trading crude and I'm trading the DAX at the moment and they're going well. I want to add another system, and I spoke about this on Monday night, adding systems to your strategy. And what is the next best system? So, I log in, I see the top 15 systems that we went through on Monday on the futures. Well, I really want to be able to then have a look at those systems and break them down. I don't want to have to necessarily load up the chart and go through the time that it takes to break down the strategy, although that is something that we're doing now. I want to be able to do that very quickly. So this is a step in that direction, but the end result for us as a group is that we will have a product that allows us to look at, say, the top 10 systems and then break those systems down and look at exactly how they're performing individually. Because remember too that everybody has different risk parameters. So what might be suitable for me, for example, as far as a drawdown, may be totally inappropriate for you as a trader. It's all well and good for me to promote a system or put a system up and say, look, this is one, this is really running well, but it may not suit your style. It may not suit your risk profile. It may not suit the combination of systems that you trade. So it's important that we can look at systems, break them down, and look at, as we've said, the level 1, 2, and 3 analysis. Level 1 being obviously finding the right time of the day to develop your pilot system up. Then level 2 is the days of the week analysis. And then level 3 is days of the week, longs versus shorts. Because we know that you can't just look at a system and say, all right, well, what are the longs and the shorts? So I'm going to show you this in the walk forward analysis because this is a really cool function of the walk forward analysis. But it doesn't go into that next level, which it needs to. So there are some huge advantages to using this tool as we go forward. So let's get into it. So as I mentioned before, optimization is the process of finding the optimal input parameters for a trading strategy over historical backtesting data loaded into TradeStation. So what we're looking for is we're looking for the best inputs, the best settings. However, what we've got to be careful of is we've got to be careful not to basically, like I mentioned on Monday, put everything in, highly tune it, highly calibrate the system, and then when we release it in real time in the market, it's just not going to work because it's too highly calibrated. So you want to develop a strategy that's robust, that can be used moving forward. And we know that it's a probabilities game. There's a chance that the market conditions will change as they do, and we've got to be able to be liquid in the market and be able to respond to that. Now, is that all we need to do with our strategy? Well, obviously, as we're looking at our system, we've got to look at and have an idea about market profile and market conditions. So it's not just about coming up with the best automated strategy or the best optimized strategy. It's also being cognizant of the fact that the market changes, conditions change, and we need to be ready to adapt according to market conditions. And we also need to have an idea of what market we're trading. Because if you, for example, spend some time doing some testing on a market you have no idea about, then that's just a waste of time. Like if you decide that you look at the the futures markets and you decide that you want to start trading cotton, you open an account up, start trading cotton, find that the spread's too wide, that there's very little there's very little volume there, or there's a lot of slippage. Without that market research that you do initially, you're basically going in blind, and that's not a good way to start. So anytime we do this exercise, we always want to complete that market profile exercise that we've got in module 7 for the pro traders. More on optimization. It only gives us a guide to what may work moving forward, so there's no guarantee of obviously future results. And optimization to historically backtested data to get the optimal settings. Again, you're coming up with optimal settings from backtested data, so we've got to make sure that our strategy is robust moving forward, and we're going to start laying some foundations for, or some inputs for, or criteria for determining whether the optimization that we do is going to be appropriate moving forward. So the goal of optimization obviously is to be robust based on backtested data. More on optimization, so we've already covered that, and we mentioned on Monday night the types of optimization: exhaustive, genetic, and walk forward optimization. Now we're going to spend a full walk forward optimization tonight. Exhaustive is where we basically are looking at testing every possible scenario that we have in our inputs. Remember, our inputs are the strategies that we have in our system. How effective do you think that is as far as how robust would that be going forward if we test all these inputs? What do you think is going to happen with our analysis as we go forward? If it's exhaustive testing, so we test every single input and we highly calibrate our system. What's the likelihood that we're potentially going to have success going forward if we do exhaustive testing? Or I'll rephrase the question. What are the two disadvantages of exhaustive testing? We covered this a little bit in Monday's session. Anybody? Okay, the two disadvantages for exhaustive testing. Number one is that it's very time consuming. So it's a very time consuming exercise. And number two is that exhaustive testing is basically testing every possible scenario. So you're really highly calibrating your system. So a lot of the time when you do that exhaustive testing, you've got a finely tuned instrument or system that's going into the market, and any change in the underlying dynamics of the market can have a negative effect on the overall strategy. My feeling is that genetic is the way to go as far as testing, less time intensive, really robust strategies. And really, when you're testing these systems, you really only want to test on the things that are going to impact on the overall performance of the system, aren't you? You're not going to want to test on things that are going to make very little difference in your overall performance, because that's just wasting time as well. So you need to be able to very quickly decide what are the things that are going to determine how profitable your system is going to be. Things like your stop, that's an obvious one. You stop on entry, running a target, maybe a circuit breaker as part of the input. So they're just little things that come to mind. Now, the walk forward optimization is obviously where we have an in sample test or an in sample example, and then we have an outer sample test where so our in sample test is where we back test a period of time, and then once we have those parameters and inputs that we've got a highly profitable system, we then apply that in real time to the market, which is our outer sample data. And that outer sample data determines whether our system is going to perform, and we did that exercise on Monday. So we're starting to get through it. So setting up your V2 Elite strategy, let's look at the chart. So we've access to the V2 strategy. Tonight I'm going to be working on the breakout, which I worked on on Monday. And obviously within TradeStation, there are a number of strategies within the suite, which we spoke about on Monday. The library of strategies, the code there, LE is the long entry, SE is the short entry. Ours aren't broken up into long and short, are they? They're basically presented as one system. Remember that input strategies are what we optimize. Okay, so I think that's it. Let's just jump out of there and go into the chart. So we'll click out of there. Now what I want to do is basically walk forward optimization is that process of, as I mentioned before, collecting information, applying it into the market, and then kind of moving on from there. So testing a sample period, and then moving that sample period into the live market, and then seeing how robust that strategy is going to stack up. And I want to show you a really good graphic of, I found this on the TradeStation website. This is a really good graphic of explaining, not necessarily explaining, but showing the walk forward optimization at its best, I think. All right, so I'm just going to bring this over because I really thought this was great. So the guys at TradeStation have put this together, and you'll see here that rolling walk forward analysis. And can everybody see that? This is a good way of kind of showing visually how the walk forward analysis is done. And I like this. This is basically off their education website where they show the new features of TradeStation. So walk forward analysis is a fairly new feature. It's been around for a little while, but it's being improved all the time. And what we're going to tap into is some of the improvements, and I'm going to create, as part of our process going forward, I'll start creating these modules on how to get the most out of this walk forward analysis. So typically what you would do is, and I'm going to kind of, before we jump in and look at this, I'm going to explain the walk forward analysis, and I'm going to explain how we typically would analyze the market and what parameters we would use. And you'll be able to see the difference between the two, and also you'll be able to see where there's improvements and modifications that we can do on both sides. So rolling walk forward analysis, you would typically test, say, 4 months of data. So that's your in sample data, 4 months, and then your outer sample data is a 1 month application. And when you see, if you see examples of this, or when we go through the optimization, you'll see it's split up into a 70-30 split typically. 70% of the data is analysed for walk forward analysis, 30% is applied into the market. And then that allows us to say, right, well, we've got our best inputs. So we've got we've got the best. So when we talk about our systems, we would, initial testing, come up with what we call a pilot system, which has basically got some robust settings. And then we would analyse that pilot system, and we would eliminate things like days of the week, times of the day, or longs versus shorts, and then we would come up with our what we call our high performance system. So those settings then are then applied into the market. Now the way we analyse it, we're basically basing our decisions on what's working as far as our performance. Now the same thing applies to the walk forward analysis, but it really doesn't take into consideration or break down longs versus shorts. It just takes a set of parameters, applies them to the market, so your stops and targets, and then that's it. It then adjusts those stops, targets, or those inputs based on what's performing well, what's not. So for the first 4 months there, you can see that you'd apply your in sample data, then you run your test, And then your next test takes into consideration this out of sample data, which is the month you've had of live trading. So you then optimize again for that period. So you take the 2, 3, 4 and the 5th month in, and then you've got a new set. So constantly, as you move down this calendar, you're constantly every 4 months optimizing, using 4 months worth of data to optimize to get the latest month worth of data. So that's really kind of what you're doing. You're constantly going through that process of every month, and what it allows you to do is it allows you to stay ahead of the curve and make sure that your system is calibrated to the current market conditions. However, what it doesn't do is it really doesn't to a degree look at the long short bias and obviously the days of the week breakdown of long short bias, but we'll go into that in a minute. But it does do a good job of obviously of looking at your system. Now, one thing that you want to be a little bit careful of when you're doing this walk forward analysis is that you don't use really highly exhaustive testing to come up with your out of sample kind of test, because if your testing is too highly calibrated, then it's just going to fall over in real time. And TradeStation have built in some parameters and some settings that allow you to test whether the settings you have through your testing are going to be robust enough to survive in the real market. So there's some really good features there as part of the testing. So let's get into it. Let's go and have a look at exactly how this works. So is everybody clear with that? Basically, you do your sample test, then you go live for a month, then obviously then you redo another test, including that live month that you've had, and then that gives you your next month's worth of data, your next month's worth of inputs to go live in the market. So you're constantly calibrating every month. So we'll just jump out of there and we'll go back to the charts. Any questions on that before I jump ahead of the charts and take you through some examples? No questions? Okay, excellent. All right, so we're back. We should be back now at the DAX. So now, when we last got together, we basically had a look at the DAX. Now we've got, as you know, what I like to do is I like to look at the daily chart, and I started playing around with the optimization, and I started to break it down into your first potential run. You optimize the in sample data, then the out of sample data is the 30% test, and that would be for a period of time. Then you would run your next set of data, which would basically include your 30% test, and then you would run your new sample data, and then you'd have a new period in which you would run your out of sample data. So that would continue run 1, run 2, all the way through to run 10, or you just continually keep going as the months roll on. But what I want you to focus on here, and I'll just get rid of this for a second, what I want you to do is I want you to focus on the state of that moving average. So if we have a look at this moving average here, you can see that there's a huge bias to the long side. So straight away we know that with any testing we do or any system analysis we do, what's the first thing that we're going to do with when we set up our system to test it, and we're looking at a particular market when we do our market profiling, what's the absolute first thing we're going to load up as a chart when we do our testing to see what's going on as far as because I want to include just some of the stuff that we've done previously. Yeah, the daily chart. The daily chart is definitely one. We want to load up the daily chart, the moving average, to see where the bias is, because obviously on the DAX there you can see the bias to the long side. So that at least allows us to say, right, well, even though we're trading potentially intraday and we're trying to pick a time of the day to trade, we know where the bias is. The bias is to the long side. So that's not going to affect that's not going to affect our trading in any way, is it? Because everything we do is objective in our testing. Is that right? We're always objective in our testing, but at least it gives us a clue or a window of what's happening. So the other thing I want to do is I want to introduce you to a great little website called seasonalcharts.com. So let's just type this in. So what we're doing at the moment, just before we go into our analysis, we're basically, what we're doing is we're going and building a profile of what's happening. So we've looked at the DAX, we looked at the the moving average. We know there's a long bias. So let's go in and have a look at the DAX, so the futures market on the DAX. And let's have a look at a DAX seasonal chart, 30-year chart. Now, seasonals are, you've probably heard of seasonals a lot before in your trading. You may not have, but seasonals are basically a pattern that happens over and over again, seasonally, and different commodities, different futures markets, different financial markets have seasonal characteristics. So, for example, one of the most popular ones, or is one of the most common ones that you'll hear about, is at the end of the year you hear about the Santa Claus rally. So the US markets typically have a bit of a run up into the end of the year, and that happens fairly consistently. And if you have a look at this seasonalcharts.com, you'll see US markets typically have a run in at the end of the year. There's generally a bullish bias, and that's referred to as the Santa Claus rally. So if we go to the DAX and we have a look, right, well, let's have a look. Now, we know that the DAX is highly calibrated, or highly attuned to what happens in the US, and we're expecting that, we would expect from that correlation that there would be a similarity between what happens on the, and we'll go to our indices, and we'll go to the DAX. We would expect that there would be a bias. There's a 16-year chart, so we can go back to the home page and see the 30-year chart, and we know that there's definitely a bias on the DAX to the long side towards the end of the year. So from end of September, October onward, and that's lining up with what's happening at the moment, isn't it? So it's although the long bias has been there for a while, so while there's been a seasonal bias to the short side from July to September, there's definitely a seasonal bias. Now, does that chart there, the 30-year seasonal bias, does that mean that that's going to happen every year on the DAX? Is the DAX going to trade in that way on a daily basis, like from a daily perspective? Are we going to see a rise from January, peaking out in the middle of June, and then July falling away, and then a rally from October? Is that going to happen every year? Or is it saying there that basically that statistically this is what has statistically happened over 30 years, but there's no guarantee that that's going to happen this year, is there? Because already we're seeing that there's been a fairly strong bias. If we go back to our charts, there's been a fairly strong bias from about July or even June earlier. So you can see there that the bias has kicked in a lot earlier. So as traders, we use this information to form a basis, and then we basically from there start to develop up our concept and develop up our idea of how we're going to trade. So these are just giving us tools to go into the market. So we know that there's definitely a long bias, and that helps with the development of our pilot system. But let's have a look at what we've got here. So what I did was basically I used the breakout strategy. Now, for those of you who are familiar with the breakout strategy, I went through it on Monday night. Buying on a break of resistance, or selling on a break of support. So what I'll do is I'll put in our support resistance indicators on the chart, just so we've got something to look at here. So we'll just quickly load that up. And the key thing here is that we've basically got our strategies loaded up, which we do. So we'll put those in here in a minute. Nice little double top there. But if we go into the format strategy, you'll see we've got our strategy loaded up. It's the V2 breakout. I've also put a stop and target in there, just to allow us to see if there's any profit. Now, on my previous foray into testing the DAX and doing a bit of a case study, what I found was that, I'm going to show you some stats basically here. What I found was that on my previous case study, and I'll just bring this up. Let me just grab my Excel spreadsheet. This is quite interesting. I think you'll find this interesting when we go through this. So I'll just move that out of the way, and I'm going to just turn to the application now. So let me just switch over to an application here. So I'll just turn that off for a second, and I'll just grab the application I'm after, and I'll just post that up into the room. So what I'm going to show you now is what I did was basically just to set the scene. I did a little bit of work on the DAX. I looked at about 450 trades on the DAX, and what I used was a breakout system because I knew that, well, I need to look at something that is going to be something that's fairly volatile, and as we all know, the DAX is definitely that. It's fairly volatile. So I decided, right, well, I'm going to look at the DAX, and I'm going to test up the breakout strategy, and looking at, so here we go. This will bring up the Excel spreadsheet. So what I did was I developed up a pilot system. Now the pilot system I developed up was fairly simple breakout strategy. I looked at, and all I did was basically developed up a system. I'm going to be looking at, once I've got my strategy set up, I'm going to be looking at the time frame, obviously, and I decided 9 o'clock to 10 o'clock was the time frame I was going to start because I knew that 9 to 10 o'clock was basically a very good time of the day, lots of volatility on the DAX. I was looking at the days of the week, so I was going to analyse the days of the week to see exactly how they were performing, longs versus shorts. The other things I was interested in were basically seeing if my overall system, once I developed up my system and found something that was profitable, I was also interested to see how the seasonal filters would affect the system. And the other thing I was looking to see was the daily directional filter and the volatility filter. Now, with the volatility filter, we'd be using the standard deviation stochastic. With the daily directional, I'm using the moving average. And with the seasonal, I'm just using seasonalcharts.com to get an idea of what's happening. So, interestingly, what I did was I basically I looked at my basic settings. As I said, 9 o'clock till 10 o'clock I was testing. I had an initial stop of 25 ticks. I had an offset of -3, so it had to actually break resistance by -3 to get me into the trade, and that was it. And I had the target of 625 as my overall target. Now, what was really interesting was the actual outcome of these results. So we're going to go in here and have a look at this, and let me just pull this up here for you. All right, so what I ended up with my trade list. I had 426 trades. Now, what I did was I basically thought, well, I'm going to filter this based on these criteria. So I had all my trades listed. I then set up a column called seasonal bias. So I went into seasonalcharts.com and basically decided that, right, well, I was going to use the seasonalcharts.com when seasonal charts were long. I was going to record that for the period that was long. When it was short, I would record it as short, and if it was sideways or flat, I would just put flat. I also decided to record the daily bias. Now, the way I recorded the daily bias, and I'll just quickly go to our DAX chart here. The daily bias was if price was above the moving average on a daily chart, if it closed above by two price bars, then I would be long. If it closed below by 2 price bars, I'd be short. So that's basically, and I found that I didn't have to do too much analysis there because there was only a few times during the period of the 6 to 8 months that I tested that the price was moving above and below the moving average. So that seemed to be a pretty good way of doing the filtering. So let's go back to our DAX case study. Now, the other thing I looked at was the volatility stochastic. Now, I've shown this in the room a few times, and what was interesting there was that if I set levels of high, medium, and low volatility, and the high volatility was anything over 90. Medium volatility was obviously between 80 and 20. Low volatility on this example was below 10. Or 16, below 16. The seasonal volatility, and I also had daily volatility. So the seasonal volatility was based on seasonal charts, and the daily volatility was based on on the standard volatility stochastic. And that was really all I tested. So what was interesting was when I went down and had a look at the analysis, when I started to filter out these trades and apply the filters for longs and shorts, what the first thing I found was that overall the system, without any kind of manipulation, without any work done to it, not taking out days of the week, longs versus shorts, the standard settings produced $8,112 for the 6 months of testing, so €8,000. Now that's not too bad as a result. It had a fairly significant drawdown. The drawdown was around about almost 4K. Actually, what we'll do is we'll have a look at the drawdown here. Let's just double check that drawdown. We'll go down here to drawdown. Yeah, so our max drawdown was $4,887. So that's a fairly significant drawdown for an $8,000 profitable system. So what we needed to do there is we needed to basically do some work to improve those overall results. We also had and I'll just go through this, average trade net profit was terrible at $13.91. There was a huge bias to the long side of $35, negative $7.85 to the short side. So let's just keep those numbers in mind as we're going through these stats. So we had a system that was fairly poor, like $13 average trade net profit. So then if we go to our trade list and have a look at the breakdown. So what I did was I thought, well, all right, well, if there's such a bias to the long side, then that should be reflected in our results. So I looked at all trades with a short bias, so taking every single trade with the short bias, and the short bias was the short daily bias, the daily directional using the moving average. So if I took every trade on the short side when there was a short bias, then I made $2,950. If I took every trade on the long bias, I made $5,162. That's fine. That's exactly what we ended up with as our overall profit. So there's no surprises there. However, once I started breaking this down into if I took longs only on the long bias, I got a massive $8,562.50 profit. So that was a huge result. If I took short trades only on a long bias, I got negative $3,400. So obviously there was no point trading the short side, and we saw that by the numbers that came up in the performance report. But if we know that ahead of time, if we know where the bias is, what are we going to do with our system? How are we going to calibrate our system when we go in and actually start looking at it? We're going to basically look at the long and short bias, aren't we, straight away? And then we can do our further analysis to look at days of the week. So if I then looked at shorts only, short bias, I had 2,787, which is not bad. So overall, combining those two together, we have a total net profit of 11,349. So we've improved our results dramatically by just trading the bias, the daily bias of the market. Now, if I then went into, say, longs during a short seasonal, $812, longs during the long seasonal, $700. So the seasonal bias even produced better results, didn't it? It produced better results than trading all trades. So even if I say, right, well, I'm going to trade seasonally the longs because that's what the DAX is, then I'm going to do better. Shorts during the short seasonal bias, $2,712. So I would have done better trading the seasonal bias than trading the standard settings. So already we're seeing that we're going to go into walk forward optimization here in a minute, but already without doing any particular improvement to our strategy apart from looking at the daily directional and the seasonal, we're already seeing some better results here based on that. Then you've got, what was interesting was that the seasonal plus daily directional, shorts and longs, based on the long and short directional, didn't really, combining those two, I thought that might do better and it didn't. So it's always good to test because my belief was that that would be a better result and it wasn't. So it just shows you that even though you think, I mean, obviously there's going to be a lot less trades there. So I haven't broken down the average trade net profit, which I need to. Now, if we look at the volatility, high daily volatility produced $5,050. The median volatility produced $2,000. The low daily volatility produced $737. Now what was interesting, that the extremely low volatility below 10, or below 16, sorry, produced a negative net value of $3,000. So I haven't got it here, but that's one of the tests I've done before. So it pays to track your volatility on your charts as well, because not every day is a trading day, as we know. So if you have got days where there's not a trading day, you need to basically be making sure that that you're not taking the trades. If the volatility is too low and you're not getting the range, there's no point taking trades. So that's interesting. We'll just put that in the back of our mind now. We'll go to our data here and we'll look at some further analysis. So what I've got now is I've got exactly the same data loaded up, exactly the same system loaded up in our breakout strategy. So you'll see here that on that first test that we did on the DAX, using exactly the same settings, with no calibration, no optimization, anything, this is what's happened. So that data was up until January. So that was from, and we'll just quickly go back to that data here just for 1 minute, and I'll tell you what the periods were for. So the start of that data was in June. So June through till December. So we've got 6 months worth of data there. If we go back to our charts, we've got a missing 4 months, which I'll make sure we add in here. But if we go back to our TradeStation charts, this should load up here shortly, you can see that the exact look what's happened to the exact same system. So it was profitable by $8,000. Now, when we run this same system from the 10th of April all the way through to the 3rd of October, have a look what's happened. It's just been terrible. So you can see that the DAX is a market that requires you to do work on that whatever system you've got, whether that system wasn't calibrated well. To know and understand with the DAX is that you really need to basically look at your system and track your system constantly, because if I go through and optimize this system, I can turn this losing system into a winning system very quickly by taking out what are the things I can do to this system to improve it immediately, do you think? Because at the moment, if we look at the strategy inputs, if we go into the strategy inputs here on this system, you'll see that it's trading 9 till 10 o'clock, so that's not too bad, but it's trading every single day, longs and shorts. So what are the things I can do quickly to improve this overall system? Anybody? Just very, very quickly, apart from obviously optimizing the inputs, what are the key things I can do to improve the overall results straight away? Load the performance tracker up, have a look at the days of the week, the longs versus the shorts, and start eliminating some of these bad. Because if we've had a daily chart since April that has been long, how do you think the shorts are going to be tracking on this system? Not too good. In fact, if we have a look at the short side of the system, the short side's made $1,000, sorry, $3,000. So we'll go to here and we'll go back to where we've got all the trades. So you can see here on the performance chart here before the calibration that the system's down $1,800, but the short side's down $1,950. And then what we also need to do is break down the days of the week as well. So there's a fair bit of analysis to go there. So, but with just a very simple calibration of this system. So let's go into the system now and see if we can improve it. So if we go, here's the equity graph. So that's what we've got at the moment as far as performance. So if we right click on this chart and go into our format strategies, we can say, right, well, let's do a couple of adjustments to this to see if we can improve it. So let's modify the support resistance. So we'll optimize that. So we'll give it a range of -5 to 10 in an increment of 1. We'll also go to the TP and we'll we'll basically calibrate that as well, and we'll go the initial stop as well, and we'll set, you know, say a 10-point initial stop up to probably a 50-point, and we'll do that in increments of 2, and we'll hit optimize, and we'll see exactly how that. So when we do this exercise, so when you're doing this exercise, if you want to in the future run this strategy as walk forward optimization, which is what we're going to want to do, you need to select walk forward optimization as part of this process. So you absolutely have to select that. And the other thing you need to do is you need to give this a name. So I'm going to call this DAX case study 2. So I'm going to go genetic optimization, and I'll go to my advanced settings, and basically I need to make sure when I do this that I'm 0 and 30, the last 30% is going to be tested walking forward. Now these genetic optimization settings, you should basically be clicking on the suggestion there and running with those, and then you're also going to select terminate optimization if population fitness did not improve for 15 generations. So if your results if you're doing 15 sample generations of this testing and your results aren't improving, then you basically want to cancel the automation, because it's just running and it's not improving at all. The other thing we need to do, because what we're doing is we're doing an optimization to get our best results, our best inputs, but we're also going to use this in as a walk forward example. So what we need to do, and I'll get you to take a note of this, is you need to save these results to a file, and we need to go browse, and we need to actually go to our disk, our C drive. So click on your C drive, and you'll see that you've got your program files on your C drive. You go into where typically your TradeStation is stored, which is in your C drive, and you'll go to TradeStation 9.1, and we will then click into, basically you have to go to the WFO, the walk forward optimization folder, and that data needs to be saved in there. So we'll save that there, and we'll save it as DAX case study number 2. So we'll save it there. So that's where it's going to save. Now if you do not save that, then you can't use that data as walk forward data going forward. So it's critical. It's like having your downloading your overall performance report and putting it into the system performance tracker. The same thing applies for when you're tracking your walk forward information. So you have to save it into your WFO folder on your C drive. So then we'll go optimize. So this will start running a genetic optimization, and what it's doing now is it's basically it's running the optimization. It's telling us that we've got a fairly ordinary equity graph. We would have done, had we had more time, we would have done more work on trying to improve it a little bit, but let's just see what we come out with, once we do the optimization. See if we can turn this losing strategy into a winning one and get some fairly robust settings that we can run in real time in the market. So at the moment we've got 33 seconds gone, negative 4,012, so we've definitely started off with a flying improvement on that. So we'll give this a little bit of time just to kick through, and while I'm waiting, I'm just going to explain a couple of things. So once you've got that file saved in your WFO, your walk forward optimization folder, that then allows you, once you finish this optimization test, to use that data in what we call our walk forward optimization. So there are two components to TradeStation. So I'm going to slide this over a little bit. You've got your strategy, obviously, and your performance report, and your strategy runs an optimization. But you've also got, if you go into your position graph, my apologies, if you go into your shortcuts bar, so if we go to shortcuts bar, you've also got your walk forward optimizer. So let's just clear this one and go to alright, so this is what we call our walk forward optimizer. Now, while that data is ticking away in the background, this is where we're going to analyze basically the report that we've just done. So I've prepared something earlier, as all good hosts do, and just to make sure that we've got a little bit of time up our sleeves. But we'll see if we can get this before then. That's okay. But what we'll do is we'll go in now and we'll say File. We want to open a walk forward test. So we want to grab our DAX case study. Now, if you have a look at this, you'll see that we've got DAX case study 2 there as well. But let's just open our DAX case study here, number 1. So we'll open that up, and that's open now. So once you've selected that, now if we hadn't have saved it in the walk forward optimization folder, we wouldn't have been able to access it. So now what we want to do is we want to say, right, well, excuse me, now we're going to do some walk forward analysis. So we're going to start the single and we're going to go, okay, so trade list file contains less than 1,000 tests for reliable walk forward. So what it's saying there is you need to really have, when you do this testing, you're really going to want to have 1,000 tests conducted as part of the strategy. So the more data you can get in there, the better. So obviously if you've got a less than 1,000, it's not as reliable. So let's have a look at what's happened. So we've just said test on this. We're going to run the test on this, and what it's given us all these optimization tags. So what it's done is it said, right, well, based on that initial test we did, it's given us our current settings. So that's the current best settings, and it gave us a net profit of 3,025. So for that period that we tested was previously negative, and with the optimization we ran, we got it up to 3,025, and you can see average trade net profit is up to $64. So that optimization worked really well in turning the system around. It's given us our 9 to 9:10 example of where our time is. It's given us our entry point of -2, our stop of 12, and that's the trail. So it's given us all the parameters that we kind of need to look at. Now what we can do here is we can say, right, well, all right, so they're potentially the best settings based on average trade net profit. We can look at the other options available there as far as settings. We can scroll down here, and obviously that was the most profitable settings that we extracted from there. Actually, there was one more profitable. But see the average trade net profit at 55.21? Not quite as good, was it? And the average win rate wasn't as good as well. So that gives us a really good look. So we'll go back here. Now, the beauty about this is the great thing about this walk forward optimizer is that it allows you also to look at the out of sample data. So it's going to tell you, right, well, what happens with your system on the out of sample data. So if you run those settings on the out of sample data for that 30, remember we saved 30%, you've got basically a drawdown of $825. So that sample that we took as far as our settings was not the optimal sample. You've got over 10 days, it's -825. 10 days -825, but when we get to 11 days, 950. So you can see there that it ends up at the end of the 19 days being up 875. So while it initially starts off poorly, it does come back and ends up making a profit. And the overall result is not too bad for the 19 days. So nowhere near it's not too bad at 87.50. So it's just tracking that by the day, and that's not a bad result. So if you have a look at the overall test results, this is a grid that tells you the test criteria based on your sample. So you've got your sample, you've tested, you've done your walk forward test. Overall profitability is a pass. Walk forward efficiency is a pass. So it's telling you, it's grading your system based on the testing you've done and allowing you to kind of it's really allowing you to have a little bit more confidence with what you've developed up as a system. So if you decide, right, well, I'm pretty confident with this system, I feel as though the numbers stack up, it looks good, then you can run it through the walk forward analysis and say, right, well, how did it go as far as the criteria? Did it pass overall profitability? Did it walk forward efficiency pass? Consistency of profits? Distribution of profits? Because remember, we don't want one single trade dictating our overall profit, or a couple of outliers. We want to have a consistency of profits. Max drawdown, no individual rundown had a drawdown of more than 40%. So you can customize these as well. So if you find that, well, look, I want to kind of change these settings a little bit, you can do that as well up here in the setup. So you can customize that. So then we go to the graphs. If you go, that's basically the walk forward analysis and the overall performance of the system. And you can see there a bit of a drawdown. We have a look at the P&L history. So it'll give you a breakdown of the profit and loss history. The beautiful thing about this is that obviously the performance graph, which you're all familiar with, but I want to take you to this area here, which is sensitivity analysis, and also I want to take you to the distribution analysis. So what this is telling us here is that this is telling us, right, well, based on our system, you can see that this is tracking the average trade net profit, which is what we're obviously very keen to look at. But the great thing about this, which I found out just recently, was that this also tracks the days of the week. So it'll break down the days of the week analysis for you. So you can see here Monday, it won't break down. So that's all trades. And then there's days of the week longs and days of the week shorts. So this is fantastic. So when you were looking for, when we're looking for something that is visual to go along with our system performance tracker, this is giving us a really good look at exactly at the end of the week. You can load your equity graph up and you can basically just confirm that, right, well, this is what I'm trading, this is what the current settings are. I can load that up into my walk forward analysis, and I can see very quickly where's the money being made. The money's being made on Wednesday and Thursday. There's no money being made on Monday and Friday. So that just helps you confirm and validate what's going on with your trades. So then I can look at, so shorts only, you'd be trading Wednesday, Thursday. Longs only, I'm looking at, just changing that for a start. Longs only, I'm trading potentially $15 average trade net profit. Really not high enough, is it? But Friday, probably longs only Friday. So it's a great way of looking at the looking at your trades, and it also is showing me that the 9 a.m. entries are definitely not profitable. So, it's broken down into an hourly distribution. It'd be great if we could break it down a little bit more than just hourly. So I'll have a little bit of a play with that, but yeah, if we can break it down even more, that would be fantastic. But you can see there that there's, starting the system off at 9 o'clock doesn't look as though it's been very fruitful. So you've also got your exit date or date stamp. So you've got Monday exits, and then you've got, which should line up, and timestamps obviously. So this is really, really good as far as the overall walk forward analysis, and then we can, once we've got that walk forward analysis set up, then the next step is to, obviously, as we're tracking our trades, set up another sample. So it's going to tell you, if you go back to your walk forward analysis, and if we go back to our distribution here, it's going to tell us, right, well, this is your best settings for the current period you've got. So for the current period you've got, but what it's saying is that it's recommended that in the next 13 days you run another walk forward analysis. So it's saying that you should basically be testing this again in 13 days based on the sensitivity of this. It gives you a bit of a guide as to how frequently you should be optimizing. So it's saying optimize in 13 days, and that'll keep your system highly calibrated and working as it should. So guys, that's what I wanted to cover off tonight. Just a brief introduction into the walk forward optimizer. Obviously, we're going to be spending a fair bit of time going through this stuff. I'm going to kind of break down some more mini training sessions on each of these, so you get more of a feel of how to use it. But you can see that there's definitely an advantage to being able to access this this technology, because it then allows us to track what we're doing, and takes a little bit of the manual processing out of the equation as well. You still should be obviously running your system performance tracker, because that gives you instant feedback on how your trades are going. But this is great for the end of the week analysis and looking at, right, well, how is my system going? What modifications do I need to make to it? But it allows you to look at the inputs more diligently, and maybe make some adjustments there based on what's happening with the market conditions. Now, even though we're looking at that, it is also telling us that that basically also that we need to consider the longs and shorts, and that's nicely represented in the distribution analysis there. So that's a nice little feature within the optimizer, which is fantastic. That's fairly new. So guys, what I'm going to do is every week I'm going to be spending more and more time going through this information. As I said, I'll add some additional modules into the Pro-Trader program, so you'll be able to go through and do some modules on the walk forward analysis optimizer as well, just so you've got your competency up on how to use it. But a great little tool. And just one thing to leave you on tonight before we go. The one thing to be a little bit careful of is you don't want to over-optimize your strategies. That's the worst thing you can do. So you still got to be mindful of the fact that you have a system, it's trading. You've got to just be careful not to over-optimize. But obviously there are huge advantages, and we've picked them out before, to looking at longs versus shorts, days of the week, the seasonal, and looking at your daily chart and your seasonal charts just gives you that little bit of a window of what's happening potentially going forward. So guys, any questions before I let you go? Any questions before we wrap up today's session? Do it on the weekend, load it up, and but keep 9.1, Stephen, because you can see here that there's a huge advantage to having 9.1 with the optimization. So thank you for your time, everybody. We've recorded the session, so I look forward to catching you on Monday. We'll do some more of this stuff. We'll be doing some more updates and some stuff on the Euro and the Forex. So I might even do a mini update on the Forex, on the currencies, because we didn't get a chance to cover it tonight. So I'll do a bit of a mini update on that, and let you know. The other thing I was going to mention too, Andrew, you're in the room, is that I spoke to Sky today, and it's happened on my platform. You've got to be multi-charts version 8 is definitely producing some very strange order entry or opening orders at the start of the Forex session when the brokers come back online. He's had a couple of clients today, exactly the same as what you had on that email you sent to support. That exact same trade has happened to his clients as well, trading multi-charts 8. So you've got to be a little bit careful of this random trade. They're not sure where this trade's come from or what's triggering it, but they've found that that on that market open on the Forex market, you'll occasionally get a trade trigger that isn't consistent with his strategy. So you've just got to be watching it. Sky's saying that it happens, potentially once a week, once a fortnight, where traders are getting a phantom trade that isn't part of the strategy but is appearing on multi-charts 8, and it's only at that time as well. So that's very interesting, mate. I thought I'd let you know that as well. And he was also agreeing with me about 9.1 as the platform to roll back to 9.0. So guys, thank you for your time. There's going to be a fair few updates out over the weekend in relation to what's happening with GMT. We've moved our office address to a new location in the Brisbane city, so we'll give you some details on that. We've also taken on a couple of new staff members, and so it's there's a fair bit happening. Bit of an update on obviously the new systems as well. So I'll be shooting out some information over the weekend just on some regular updates, and I'll look forward to catching you on Monday. We've got another big week of training next week, so Monday, Wednesday, and we may need to have a third session next week depending on kind of what comes out from the coding team. So we'll see how we go. Okay, traders, thanks for your time. If you did enjoy the video, please feel free to just click on the like button below the YouTube video, and that'll help us to keep posting these videos up on YouTube, because we'll be getting some feedback, which is great. And also, if you'd like to become a GMT Pro-Trader, please email info@gmtfutures.com for more information. You can also visit our website at www.gmtfutures.com. So thank you for your time. Have a great day, and I'll catch you on the next video update. Cheers.